Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Tuesday, January 7th, 4:47 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. State of the market, we've labeled it as a short-term pullback, and we'll get into the reasons why. Market leaders, we currently have a neutral. Many liquid leaders are holding up. We're also starting to see some distribution, some reversals, some failed breakouts, some leakages below key moving averages as well. Short term, the S&P, mid caps, Dow, small caps below the 21 EMA, which is why we have the red arrow. Q still above, slightly above. Actually, we broke down below. So we're definitely monitoring that action, but it's not a clear break yet, which is why we still have the Qs at neutral. In terms of the medium-term trend, Q is still above the 50-day. S&P is still S&P sliced below the 50-day, and then the rest of the indexes are also below the 50-day moving average. We actually had a power of three breakdown in S&P today as well. Long-term trend, we're still all above the 200-day moving averages, which means long-term we're still up. And as always, nothing serious happens until we're below that 200-day simple moving average. What happened today? Markets spooked by inflationary economic data. NVIDIA also big breakout failure. 21 over 21 list down 3.22%, one up, one neutral, 19 down. Big 8 down 2.26. NVIDIA had a gap up into all-time highs and then a complete reversal bearish engulfing. Pretty big distribution day on that name. RGA down 1.44%. S&P down 1.11%. RSP down 0.32%. Qs down 0.17%. Qs down 1.78%. Equal weighted down 0.91%. Dow down 0.44%. Midcaps down 0.61%. Russell down 0.8%. 60/40 down 0.68%. And GROTECTION down 1.9%. So jumping right into it, starting off with the S&P 500 index. You can see yesterday we had a wedge pop above 821.50, and now we get rejected at 6,000. We're back below the 821.50 on that inflationary data. One thing I am a little bit concerned about is you can see this kind of head and shoulder-ish pattern. You can see this shoulder, head, and this other shoulder right here. And so far we are breaking. This would be the neckline right here, which we continue to find support on 12/20 as well as January 2nd. So we look back at the last few weeks of trading. We had a churning day yesterday, so you count that as distribution. We had distribution day today on January 2nd, another distribution day on December 30th, another one the day before, December 27th, and another one on 12/18, a massive one on FOMC. Another one on December 9th, and as well as another one on December 5th. So that's 1, 2, 3, 4, 5, 6, 7 distribution days within the last about 5 to 6, 7 weeks. And that's definitely not a good sign in terms of that just signals that institutions are slowly getting rid of their stock. So we'll go on to the equal weighted index now, just far weaker, still trending below 821.50. That is because the heavy market cap weighted stocks have been carrying the indexes recently. And as you can see, this index is plagued with distribution. A sea of red or pink, whatever you want to call it, many skyscrapers of distribution as well in this index. Qs, similar action. In the NASDAQ composite, actually, it was noted that we had the highest volume ever in this index, trading almost 134 million shares. And this is a lot of it's due to some stocks that were up actually on the day, trading enormous amounts of volume. But this is a huge, huge distribution day, nevertheless. You got another one this day. So that's 1, 2, 3, 4, 5, 6, 7 distribution days within the last 5 to 6 weeks. So going back to the Qs, which is the NASDAQ 100, we broke below 8 and 21 EMAs, but we still closed below the 50-day, above the 50-day. Equal weighted, a lot weaker, trending below the 50-day and back below the 8 and 21 with 200-day supporting this index so far. RS line has been completely lagging. Dow building a shelf right below the 50-day and 8 and 21. This looks like it wants to break down and test the 200. Mid caps as well, just kind of bear flagging, bear wedging, below declining. 8, 21, and 50 as well. Russell, same thing. You can see that bear flag forming. Looks like a 200-day test may come. VIX had a VIX spike today about 10%, back up to around that 18 area. Definitely elevated volatility coming into this year and heading into the inauguration. Definitely don't want to see the VIX get it back above 20. We've definitely felt this in indexes as well as individual stocks as well. Dollar elevated, found support in the 21 EMA. Huge move up today, especially on the inflationary prints, as well as just Trump being a more pro-dollar candidate coming into office, talking about tariffs, and he's really just pro-nationalist in general, and that's strong for the dollar. Gold still just within this range, nothing too much to talk about. Some really tight action now. Break below the 50, it's actually a potential buy opportunity. Silver just lagging below a downtrending 50. Nothing really good happens below downtrending 50, especially after breaking the 200 as well and just kind of wedging up here. Gold miners, even worse. We have us below the 200-day and nothing good happens below the 200, so we can kind of neglect that right now. IBIT, failed breakout. If we go to Bitcoin, we had a pretty massive failed breakout, bearish engulfing, back below 100K, back below the 50, and testing the 10-day moving average in the 20 right now. This also sold off on the inflationary numbers. So just have to see what happens here. Definitely choppy action right now. We really need to get back over this 102,500 area for it to really go anywhere. And finally, let's talk about bonds. Yields all spiked today, especially the 10-year, which made new 52-week highs. No, not quite yet, which made new year-to-date highs, as well as the 30-year. And that is on the heels of the harder than expected ISM services numbers and jobs openings numbers at 10 a.m. Eastern time today. So that is it with the inter-asset correlation. We'll get right into the tail of the tape now. We're operating under the bear case now with a break below the 21 EMA. Again, news, hot jolts in services that led to rising rates in the dollar, putting pressure on equities. Because as you know, in valuation models and institutions, the present value is heavily influenced by rates, used as a discount value in terms of pricing future cash flows back to the present. Today's keys, we're watching S&P versus 21 EMA. We closed below that. Qs closed below 21 EMA. Leaders, after 3 days, definitely weak reaction. And then small mid caps and RSP below the 21 EMA as well. Day count, we had up 2 to consolidation 12/down 1, depending on how you want to look at it. 1 day below the 8 EMA, 1 day below the 21 EMA. Expectations are neutral, but they will slowly turn negative, especially if the Qs break the 50-day as well. Action, we gapped up about 30 basis points, and then it turned into a trend down day. Strong sectors today: bond yields, dollar, energy, healthcare, solar, gold, silver, oil. Bond prices are down. The growthier S&P sectors, tech, discretionary, communications are all down. Bitcoin and miners are down. RK, mega caps, and semis. Our RVAB ending today was 1.17, about 3.38% open heat. We dumped all of Twilio, Square, Palantir, RBRK, trimmed Avgo, ALAB, UPro. And the bottom line, market spooked by inflationary economic data, NVIDIA, big failure today. So I guess let's talk about the names we sold. First one is Twilio. And let me just double check one thing here. Give me 1 second. All right, we're good. So the first name we sold was Twilio. And yeah, we just wanted to reduce some exposure, especially with the numerous distribution dates coming in the markets. Really an expectation failure for us on many names, including NVIDIA, S&P, and the NASDAQ following yesterday's action. And the news event with the hotter than expected ISM services and jolts definitely spooked the markets. The Fed swaps, the CME watch tool is pricing in lesser than expected rate cuts as well. We just wanted to reduce some exposure, especially Twilio uh, being a negative position for us. Next one, we sold a Square, came back in this weekly level here. And so we decided to take down the position as well. Palantir broke the 8 and 21, just looking like it's heading for the 50. So we took some down there. RBRK also weak. The close pretty strong yesterday, broke the 8 and 21, so we ditched that. We trimmed some Avgo as we're kind of leaking below the 8 as well. 21 EMA looks like it's coming up next. A-Lab, we trimmed half as well just to reduce exposure. And then UPro, we trimmed yesterday's ad as we broke below the 8 21 and 50. So I guess we can jump right into the 21/21 list. We'll talk about the only green name today. That's EQT, the natural gas name, breaking out actually into new 52-week highs. So this continues to act really, really strong. Reason being is we're expecting some colder winters in the US all around, as well as natural gas being the best way to power data centers right now. We talk about the SMRs, nuclear, we talk about alternative energy, but that's still a thing for the future. It is not currently fully operational to power all our data center power energy needs. So we'll then start from the bottom. Biggest down name was Palantir. Broke the 8 and 21. We talked about uh, dumping the rest of that position. APP also breaks the 8 and 21. A-Lab breaks the 8, still closed above the 21, but we just want to take some profits down as we're up nearly 100% on some of the earlier buys. NVIDIA pushed up into new all-time highs, a huge bearish engulfing back to the 50-day on massive volume. To me, this shows institutions are distributing into the market. They're using the CES event as Jensen Huang and many other tech companies releasing new innovations and products and services as exit liquidity. And we'll see what happens. We'll see how this plays out, but this is definitely not a good sign for NVIDIA. This is not how a TML acts at an early stage of a move or even a mid stage of a move. This is distribution action in a stage 3 topping phase. At least that is what the action is telling me so far. At the same time, we do have relative strength, new highs. So there is some conflicting signs, but we'll continue to monitor this closely. Rubric, like I said, sold the rest of that. IBIT failed breakout. We talked about that. Square also broke back into the base. Just not doing what we want below the 8 and 21. And we really want to keep things tight, stops tight, especially with the markets weakening here. Reddit continues to act pretty well. Had a solid undercut rally and then a failed breakout. So we've seen this. We're seeing the VIX reflect many names with a lot of volatility here. Avgo starts to leak off below the 8 EMA. I guess we can say we're breaking that trend line as well. So 21 EMA retest is definitely coming there as well. Rocket Lab poke its head out, failed breakout so far. INOQ, I mean, this name is up from like $5 all the way to 44. So a massive move already has been made in this name. Can't really ask for too much, but of course, stocks can go up much higher than we expect or think. Reversal today. Twilio, and another name we got rid of, Marvell, continues to act fine. It really hasn't gone anywhere since the gap closed. Pretty much actually negative since the gap day closed. CRDO starting to build this handle up here, maybe another iteration of ECP, and this could be ready for higher prices. Deckers looking to build this little shelf right here. Nothing too much about it. GEV breaks out to new all-time highs. This is a name that we highly favor. The RS line has broken out the all-time highs as well, 97 RS. And they make those natural gas turbines to help power data centers as well as the electric grid. Perfect retest of the previous all-time high. Google pushed out nicely, but rejected by 200 so far. Reversed back in. Still fine action right now. CLS, uh, just above the 8 EMA. Nothing too much to say here. Bros broke out. RSI broke out as well. This is definitely a relative strength stock. Just digesting normally here and continues to show RS. Then Ralph Lauren breaks out yesterday into new. Is that all-time highs? Looks like that's new all-time highs. And so far reversed, but still above the pivot. So with that being said, that covers all of 21 over 21 list. The main points today is that we saw a failed breakout in NVIDIA, a screw bar in S&P, back below 821 and 50, Q's back below 821. And this was primarily driven by the inflationary economic data. So the market continues to stay quite volatile, the VIX around 18. Seems like the market's quite data dependent as well, focused on whether we see inflationary data, recessionary data, or just trying to gauge if the Fed really has control over this situation. So with that being said, that is going to wrap it. As always, we'd like to hear from you. My email is ted@revereasset.com. You can also reach out to Dan and Don at revereasset.com. My Twitter is TedHZhang. Our phone is 855 Real Wealth. That's 855-732-5932. Our website is revereasset.com, where you can subscribe to our newsletter and have our YouTube videos come into your inbox. And you can also go directly to our YouTube at Revere Asset. If you're interested in becoming a client, please reach out. And as always, we have that new TurboTection portfolio. If you're interested in that, you can reach out to me again at ted@revereasset.com. I'd be happy to take care of you and get on a phone call with you. So that's going to wrap it. This is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening and have a great rest of your week.